Meetup. Good evening, everyone, and thank you for joining us on this earnings call organized to discuss the financial and operating performance of Everest Kanto Cylinder Limited for the second quarter ended 30th September 2021. We have with us today Mr. Puneet Khurana, Managing Director, and Mr. Sanjeev Kapoor, Chief Financial Officer of the company. Before we begin, I would like to state that some of the statements made in today's call may be forward-looking in nature. A detailed statement in this regard is available in the Q2 FY2022 results presentation that has been sent out earlier. I now request Mr. Puneet Khurana to start the proceedings of this call.
Good evening, everybody. I warmly welcome you all to the Everest Kanto Cylinders earnings call to discuss the operating and financial performance for the quarter ended 30th September 2021. As you know, our company is the largest manufacturer of seamless steel gas cylinders in India and have significant international presence. Our products have applications in sectors such as automobiles, healthcare, manufacturing, aerospace, and defense, among others. Over the last 4 decades, we have delivered over 20 million industrial and CNG gas cylinders. Currently, we have an aggregate capacity of about 1 million cylinders annually in India, UAE, and United States. We are currently in process of expanding capacity in India, with India targeting 15% contribution to the gas to the country's fuel mix. Consumption of gas across the wider economy is expected to expand substantially over the next decade. Given the economy and environmental benefit of gas usage, similarly, trends that are gaining traction across the world's largest economic regions. In India, we are seeing rapid expansion of country's city gas distribution network that are slated to achieve deep and extensive nationwide coverage over the next few years. This will provide easier access to CNG for all substantial number of vehicle owners in the country. Alongside this, all the leading automobile manufacturers are making available a wider range of cars, buses, and other vehicles fueled on CNG. We see an entire ecosystem scaling up across the country, driving secular demand growth for our products. The other key dimensions on the recent demand has been from medical oxygen cylinders for healthcare sector. We have thus contributed to the best of our ability in India to fight COVID since April last year, supplying cylinders to government agencies, hospitals, and NGOs across the country in time of crisis. Currently, our India plant has been operating at close to optimal levels. Having undertaken such debottlenecking initiatives over the last few months, we are expanding capacity to move to the next level of growth. We are taking forward brownfield projects of our plants located in Tarapur and Kandla that will add capacity of 4 lakh cylinders annually. A capital commitment of 35 crores is envisaged to be financed completely from the internal accruals and executed over the next 8 months. This expansion is in addition to the greenfield capacity of 2 lakh cylinders that we are pursuing in parallel. We are also expected to be financed from business cash flows. Our UAE production facility, we are targeting a growing number of emerging markets such as Egypt, other African countries, and South America. This is beginning to deliver positive results as we see further scope of penetrating these regions going forward. Our plans in Hungary are progressing and will see a local production unit in European Union, allowing deeper access to larger markets in the coming years. Also in the US, we are seeing improved operating performance, and recent announcements around the infrastructure investments open new expansion opportunities for us. For one of these, increasing adoption of hydrogen globally, which is an exciting new area that is likely to gain traction in the years to come. Coming to the financial performance during the Q2 F22, EKC maintains a strong momentum of business growth and margin expansion. Consolidated revenues expand by 71% to 421 crores. EBITDA was higher by 136% to 112 crores. EBITDA margin expanded from 19.2% to 26.5% on year-on-year basis, as operating leverage allowed margin expansion across the geographies. Profit before tax, before exceptional items and foreign exchange variations, was up by 209% to 103 crores. Profit after tax increased by 145% to rupees 71 crores. Earning per share was rupees 6.33 in Q2 and rupees 12.50 in H1 FY22. Revenues in our Indian, UAE and US operation increased by 58%, 133 and 84% respectively, indicating growth across all geographies, segments. Margins have also seen substantial uptick in each of these geographies. Debt has reduced from rupees 203 crores in March 2021 to 133 crores as on September 2021. Based on substantial cash generation from the business, net of cash and bank balance, our outstanding debt stood at rupees 64 crores at the end of half year. To close, I would like to say we look forward to the future with positivity. We see several years of growth visibility as gas usage continues to expand across the world. We are poised strongly within the emerging framework, and we look to leverage an existing platform to drive profitability growth. We are simultaneously executing expansion programs and several organization improvement to drive long-term and value creation across all our initiatives. On that note, I come to an end to our opening remarks and would request the moderator to open the forum for any operational and strategic-led questions that you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Pratik Kothari from Unique Portfolio Managers. Please go ahead.
Hi, good afternoon, and thank you for the opportunity. Two, three questions from my side. One, on the capacity, I believe the debottlenecking that we were undertaking is done as of date, right?
Sorry, the debottlenecking you're saying?
Yeah. So we are done with that, right?
No, the debottlenecking. Okay. It's still underway, and the 35 crores that we have been talking, that is an additional effort that we are putting in the debottling initiative.
It should enhance the capacity.
Okay, so this 35 crores also gets us another 4 lakh cylinder capacity, right?
Yeah. So there's already that initiative that we've taken in the past.
Yes.
Adding this initiative, we are also, taking equipment that is already available in the company and, trying to expand capacity as soon as possible to, to see this opportunity that's available.
Fair enough. So we have the numbers correct. Our installed capacity is about 9 lakhs as of date. We are doing one brownfield of 4 lakhs, which will come in, I believe, next financial year. Then we have another 2 lakhs, which will come in FY24, which is a greenfield capacity. And there is plan of about 2.5 lakhs in Hungary.
Yeah, right.
Correct.
Okay. And in last phone call, we had mentioned that we share more details about Hungary plant today. So do we have more information in terms of what capacity, what capex that we'll be doing there?
So I'll update you on that. I mean, the total capex envisaged is around 134 crores, and the investment from EKC group would be up to 20 crores.
Okay.
Yeah.
Fair enough. Thanks.
And we expect to complete this in the next 18 months.
Okay. So this also will come on stream in FY24.
Right. Yeah, and we are wanting to push this earlier, say by mid-23.
Yes. Fair enough, sir. Sure. And sir, for the past few times, we have been mentioning this huge opportunity that we see because of adoption of gas in India and CGD. So if you can just explain across the whole value chain when India as a country adopts more of or we expand more on the CGD side, adding more cities. So where all in the value chain are we present and how do we benefit?
So in the value chain, of course, we are we are providing cylinders for the onboard on vehicles. So all the vehicles that run on CNG require a cylinder to carry the gas.
Yes.
That's one area that we are. And all CNG stations, they are using a bank of cylinders as an intermediate storage.
Yes.
And also in India, we have a mother-daughter system. So, whenever a CNG station has been set up, and, some cities that don't have a pipeline, they depend on the mother station which is connected to the pipeline to supply to satellite stations. So there also we are supplying our bank of cylinders cascades that are going in to, set up smaller satellite stations. So this is where we are in the value chain.
Fair enough. Understood. And on the auto side, I believe you had said that about 60% of our sales come from auto and 40% on the industrial side. And on the auto side, all of it will be to the OEMs, or we do
yes, we have to OEMs, mainly to OEMs, and small percentage even goes in the aftermarket in the existing conversion that is happening.
Okay. But that will be a small number.
Yes.
Okay, fair enough. And we mentioned about this hydrogen opportunity or we being presented. So is it a substantial contribution now, or where are we?
Hydrogen is
just ready with the product?
Hydrogen is just being something that is coming up around the world, and we just want to be, put our heads up and be ready for this opportunity when it comes. But definitely it seems, because in the US and in China and other countries, the initiatives of hydrogen are moving quite fast.
Yes. So our product is already tried and tested. We have commercially supplied it to someone on the hydrogen side.
It's more of at development stage, I would say. We don't have a product that is, ready for a onboard application for high pressure hydrogen.
Okay. Fair enough. Yeah. Sure. Thank you, sir, and all the best. Thank you.
Thank you.
Thank you very much. The next question is from the line of Nirav Shivai from HDFC Securities. Please go ahead.
Thanks for the opportunity. Just to continue the previous participant's question, what would be the kind of competition landscape which we have for the India business now? CNG we understand is a decade story. So who all do we compete in India?
So India we compete with a company called Rama Cylinders. We compete with the company called JFE, FJM, Sauwala, Euro Cylinders. So there are about 5 to 6 competitors if I'm missing somebody, yeah.
Okay. And in terms of capacity, where do we stand the market share right now?
We have the largest capacity in India. So, I don't know if that answers your question. Is that what you...
No, so if we see, what is the total capacity which is there in India on the CNG side?
Capacity, how much is in India?
Yeah. I mean, there are 5, 6 competitors, so if there is any data which you can share.
Okay, I need to total that up. I can definitely give you that number, not a problem. I don't have it right now offhand.
Okay, no problem.
Yeah, but EKC is at around 50% of them. We have 50% market share.
Okay, 50% market share.
Yeah.
Right. And then also on the margin side now, for the last 2 quarters, we have been doing exceptionally well. So are those kind of margins sustainable, assuming we are operating at optimal capacity? So how do we see this for next 2 to 4 quarters?
See, margins, I think, realistically, some 27 to 29% is something that we feel is something sustainable.
Okay.
Yeah.
All right. And the last question, see, there are a lot of new geographic areas where CNG is going to come in next 5-7 years. Now, with your experience, when there is a new CNG station, how long does it take to scale up? As in, CNG cars have to come. So, till that station is there are no CNG vehicles. So, how long and what is the time lag required? Does it happen in 6 months, 1 year, or what's your experience?
Now what has happened is that, people are very familiar with what CNG is. So when a station comes up, first thing, today what has happened is because diesel and petrol prices have gone up so much, and you suddenly see a CNG station in your small town, and then you see 50 rupees or 55 rupees of CNG, and you see diesel at such a high price, and that the technology is proven in Delhi and Bombay and Ahmedabad and Bangalore, and you see major cities have been quite successful. So customers are inclined, as soon as they see a station now, you don't really need to talk about CNG to customers now. And the ecosystem, all the automobile manufacturers have a model. So if you're looking at a smallest town and somebody decides to buy a Suzuki or Hyundai or a Tata truck or a bus, they're immediately available. And so I think this is the kind or a Bajaj auto rickshaw. So they're immediately available.
Right. And another total India business, how much would be coming from CNG right now in
I think
revenue?
60%.
60%. Now with this incremental capacity which is going to come by next year and next year about, we understand about 6 lakh cylinders will be coming.
Yeah.
So what can be the optimal revenue from India business? With
I think maybe around 300 crores.
300 crores, which would be by what, FY24?
And this does not include the greenfield. Yeah, this is just purely the
brownfield debottlenecking full. All right. So by FY24, this can be the optimal revenue, or maybe next 2 to 3 years.
It will be around there, somewhere. Yeah, around there.
Right. All right. That's it from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Akshay Chheda from Perfect Research. Please go ahead.
Yeah, a very good afternoon, sir. Sir, at the current run rate of our business performance, do we expect to be debt-free in a year's time? And once we have, paid up the debt and other stuff, so what is the dividend payout ratio that we can accept?
I think from debt point of view, I think we are targeting that only. We should be debt-free by another year.
Okay.
And I don't know, dividend, whether we are allowed to. As per policy. Yeah, as per the policy of the board. This is really the decision of the board.
Okay. And next question would be, while the revenues from the US and Hungary have grown on a QOQ basis, can you throw some more light on the fall of margins?
Fall of margins
on a QOQ basis.
I think it's a lot of mix of things that our business consists of. But this is more of a realistic margin where we find ourselves in, because we have a lot of product mix and value-added products. So some quarters you may have a lot of value-added products being made. So, but I would like you to keep in mind that we will go with a realistic margin of say 27 to 29%. I think this is something that you can see this going forward. Yeah.
Oh, okay. That looks nice. And sir, the third question would be, what is the threat from imports of CNG cylinders, sir?
See, nowadays, what's happened is because the products from international markets have also become expensive.
Mm-hmm.
So we don't see much of a major threat.
Okay. And sir, how much capacity is being expanded by our domestic competitors given the increase in opportunity size as you mentioned in CNG cylinders?
See, they have also been expanding capacity, but I will not be able to comment any specifically on this.
Okay, sir. Yeah, that.
Everybody is looking at the opportunity as we are.
Okay. Thank you so much, sir. That was all from my side, sir.
Thank you. The next question is from the line of Dixit Doshi from Whitestone Financial Advisors. Please go ahead.
Yeah, thank you, sir. Thank you for the opportunity. Sir, you said that CNG cylinders contribute to 60% of the revenues, eh?
Yes.
And how much would be the industrial and medical contribution?
So I think around 40%. Medical has been reducing, over the period of time. So, but industrial has always been, with the company. So industrial segment is a segment that has always been with the company and will remain to be a part of the product.
So after CNG, industrial would be a big part of the revenue.
Yeah, it will always remain. Industrial has always been a contributor.
Okay.
Yeah.
So it would be around 25 to 30%.
No, around 40% now. Industrial is today 40%. CNG is just the faster growth is coming in CNG. So all our initiatives now on the expansions are towards CNG, most of it.
Okay, so broadly CNG and industrial put together are 90-95% of the volumes, and in medical, fire, composite would be a small part.
Yeah. But usually medical will come into industrial. I don't have the breakup right now between in industrial.
Okay. Medical is a part of industrial.
Part of industrial only. It is always considered part of industrial only.
Okay. And so what is the typical life of these cylinders? So
for CNG, the life is around 20 years.
Okay.
Yeah. Industrial cylinder life is, it doesn't, they don't specify a life for the product. But, because of the use and tear and wear, you can say, around 15 years.
Okay. So basically the demand for industrial would be driven by capex, and for CNG the demand will be driven by the CGD network expansion.
Exactly.
Okay. And you also mentioned in your speech, sir, that there are in the gas stations they also have some kind of cylinders they keep for storage.
Yes.
So would that be a big part of the demand? How many cylinders does one station?
So it is an important part of our business.
Okay. So if one gas station is put up, they would require at least 30-40 cylinders or 10-20 lakhs worth of cylinders?
Yeah, you could say that. Yes.
Okay. And our major raw material prices have seen a lot of rise in last few quarters. So how easy or difficult is it to pass on the cost to the customer?
The customers have been kind, and we have been able to pass on the cost, to the customers.
Okay. Thank you. Thanks. If I have any other questions, I'll come back.
Thank you.
Thank you. The next question is from the line of Prakash Chandra Prabhakar, individual investor. Please go ahead.
Hi, good afternoon. Many congratulations to the management of EKC for a fantastic set of results. I'm sure it has become like a consistent performance curve from management. Every time you keep surprising the investors with better results. Keep it going. I just have like a follow-up remark to make. In the last investor call, we spoke about, kind of reducing. I know you're reducing the debt, but reducing specifically the debt of the promoters. So I think I'll just like to kind of remind about that. And also one small suggestion I wanted to make. Amongst the investor circle and those kind of things, I think EKC could make an effort to be seen more as a last mile enabler of the green story of India, which is a very important perspective after the COP26 and those kind of things, and not be seen just as a pressure vessel manufacturer, which is kind of a check-in. So that's kind of an observation for the management to think about, and probably run a communication campaign around that. Thanks. Thank you very much.
Definitely. So I think the question was regarding the
repayment of debt.
Repayment of debt to the promoters, right?
Yeah.
So I think this is our plan now. I think we kind of retired most of the debt, and we've done most of the expansion. The money that is required has been also put earmarked. So I think maybe another year we would like to just close on that.
Fantastic. Thank you very much, Puneet.
Thank you for your suggestion. Thank you.
Thank you. The next question is from the line of Tushar Sarda from Athena Investments. Please go ahead.
Yeah, thank you for the opportunity. I wanted to understand a little more.
Tushar, sorry, we are unable to hear you. We lost your audio. Are you there?
Hear me?
Yes, now we can hear you.
Yeah, sorry. Yeah, I wanted to understand a little more on the CNG for auto. What is the breakup between on-board vehicle and, in gas stations of this 60% business that you have?
I don't want to, put these numbers out.
But approximate, if you can get some color.
No, we just want to keep, these numbers, we don't want to get into so much detail on this.
Okay, no problem. Second was, you mentioned 4 lakh cylinders you are adding as brownfield. Is that right? Because I think in the last Concall it was 7 lakh plus 2 lakh greenfield. So this 4 lakh is new capex?
Yes.
What is the capex amount for this?
So the capex amount, 35 crores is what earmarked, but there's a there's a lot of equipment available within the company that we are using to add to this capex. Further, already a lot of investment has gone into debottling over the period of time. So, this is what.
Okay. And by when would this be operational?
I think 8 months. Yeah, 8 months.
Okay. And last question from my side. On your international business, it is mostly industrial, right? There is no auto.
No, there is. Dubai, I think 70% of their business is contributed by by CNG.
CNG auto.
Yeah.
Oh, in US and Hungary both. In US and Europe both.
More in Dubai. US is more aerospace and defense and industrial gases.
Okay. Thank you. I'll get back in the queue for more questions.
Thank you. Next question is from the line of Chetan from Alpha Invesco Research. Please go ahead.
Yeah. Thank you for the opportunity and congratulations for a great set of numbers.
Thank you.
Sir, as we just mentioned that our capacity will be going up by 4 lakh cylinders over the next 8 to 10 months, and most of it will be absorbed in the CNG or let's say auto OEM market. How much of it can go to, let's say, 3-wheelers versus 4-wheelers, and what is our existing revenue composition? Actually, when we say 50-60% of the revenue is coming from OEMs, how much of it is going for 3-wheelers versus the passenger vehicles?
3-wheelers versus passenger vehicles. I don't have those numbers with me here. I don't have the exact numbers.
Mm-hmm. But any ballpark idea?
But the expansion is definitely will be going, portion will be going into industrial and portion will be going into CNG.
Okay.
Yeah.
No, but out of our current CNG sales, what ballpark, let's say, what number is going for the automobile, the passenger vehicles versus electric 3-wheelers?
I don't have the breakup with me right now, but we can definitely give it to you. But definitely the 3-wheelers and 4-wheelers, all of them are growing quite fast.
Mm-hmm. Okay. So because given the increment. Yeah.
So 3-wheelers have come a long way, but the 3-wheelers used to be growing much faster before because of the cities like Delhi, Bombay. Lots of 3-wheelers have already come into major cities because 3-wheeler has been around for the last 7-12 years. It has been there in the market. So 4-wheelers is the one that has not been there for not too much of has activities happened on the 4-wheeler. So now you see that the 4-wheeler growth is much faster than the 3-wheeler growth.
Okay. But just to continue my point on 3-wheelers, what percentage of 3-wheelers in India which are getting sold are currently CNG fitted? Let's say, I think the number is very small right now. So what I'm trying to understand is
I think the OEMs can give you a better number with like Bajaj or Peugeot or somebody, but I can tell you it's a large number. I would think it would be around 40-50% of their production is going into CNG now.
Okay.
Yeah.
Because I think why I'm asking this again is because 3-wheelers are one of the first category which might just get disrupted because of electric. Because the adoption is happening quite faster on that side.
Right.
So, what are your views on that risk, and how do you?
I think CNG is quite affordable, and if you're looking for power in your vehicle and your electric vehicles on 3-wheeler, I haven't seen much. I haven't seen much vehicles right now on electric. But CNG definitely is a preferred fuel at this moment, because you do have 3-wheelers being used, but mainly for smaller duration, distance travel. But if you're looking at larger, more power vehicles carrying more, like maybe a commercial 3-wheeler, that are still on CNG. And CNG is more preferred, because the kind of road infrastructure in India is still not very good for electric vehicles. And again, infrastructure for electric also vehicles is not, much. Because electric vehicles have been now in India for the last, I think, now it's been almost 4-5 years I've been seeing electric vehicles. As a 3-wheeler and 2-wheeler are concerned.
Mm-hmm.
They've been here. They've been here for some time now.
Okay, good. So can our auto OEM CNG/CNG share move up from, let's say, 60% to 80% given the incremental capacity of 4-5 lakh cylinders is coming in?
Sorry, I didn't understand the question. Sorry, can you?
Our OEM sales are currently around 60%. CNG sales is currently around 60% of the revenues, right?
Correct.
Is it 60% of the revenues or the production?
You could say revenue.
Okay. And production will be lesser than that.
More, yeah. Okay.
Okay. So currently, let's say if it is at 60%, can it be 80% going forward? Because
it can. Definitely, it will. It will become, because the expansions and our initiatives are all on CNG right now.
Okay.
And all our commitments to all our customers are also, because we also have to commit to our customers. So we are also committing to lots of customers on what our plans are going to be, because they are also growing and expanding according to our plans.
Okay. Because I think, sir, we have a big opportunity because I was just looking at the CNG vehicle population on roads. It is currently at 3.5 million.
Yeah.
It is nothing given the context that we have 6-7 crore registered vehicles on the road.
Yeah,
that number is very less. So can the conversion can the retrofitting or aftermarket become really big going forward?
It is already becoming
bigger than the OEM business.
I don't think it will be bigger than the OEM business, because OEM has wide range of products. The aftermarket is definitely going to be there for a long time, but again, it all depends. Usually customer doesn't keep a vehicle for very long, 5 years, 4 years. Till then new models are coming. So that now things have changed so much. When vehicle owners, So I think OEM definitely is going to surpass. Yes, in the past, maybe 3, 4, 5 years back, yes, that was the scenario, but the scenario has changed now. The OEMs have, and especially when the diesel prices and petrol prices have gone up so much, customers want a CNG vehicle and, preferred an OEM vehicle.
Okay. So let's say if we need to measure or let's say if we need to understand from where the growth will come from. So from our conversation, what I understand is we should look at the passenger vehicles and the three-wheelers or passenger vehicles.
Everywhere. Passenger cars, three-wheelers, your buses, trucks, all of them. Your commercial vehicles, everywhere.
Okay. Just one last question from my end, sir. What can be our peak capacity utilization? Can it be, let's say, close to 100, more than 100? Because in some cases...
No, I think 90 is what the best, I think, because these are all, hot working equipment, so 90% is what something you can, safely take it.
Okay. So, I think from our, in our existing capacity also we are expanding from 7 to 8 via debottlenecking, 7 lakh to 8 lakh. And from on top of 8, we are adding 4 lakh more brownfield and followed by 2 lakh greenfield, for which we are still looking for.
Yes.
I mean, the announcement is not concrete yet, right? Is that the fair understanding? Can we just give so this debottlenecking is already in place and it is up and running?
4 includes one of debottlenecking.
So 4 includes one of debottlenecking.
Oh, okay. So actually it is 7 plus 4 plus 2. So total capacity after everything that has been announced will be 13 lakh and not 14 lakh.
Yes, correct.
Got it, sir. That's it from my end. Thank you very much.
Thank you.
Thank you. The next question is from the line of Sunil Jain from Nirmal Bang Securities. Please go ahead.
Yeah, thank you for taking my question, sir. First of all, about the margin, you were indicating that 27 to 29%. That is at India or standalone level or at consolidated level?
Standalone. Yeah, I stand corrected. Standalone, yeah.
Okay. And another question about Saudi operation. What is the capacity we have there, or how much peak revenue we can generate from there?
I think around 240. Yeah. 240, 50 CR? 240. Yeah, around say 300 CR, 300 crores.
300 crores. And how's the order booking? Because we are seeing some revival over there in last 2-3 quarters.
Yes.
So how's the order booking over there?
It's very good. Order book is very strong there. Yeah.
So whatever the revenue we have achieved, we can improve or can at least sustain those levels.
Yes.
Okay. And last question about the US operation. So we had seen last 2 quarters revenue improving. So is that pick up in the from the defense side and all is continuing or?
Yes. It looks quite positive. So I think it will continue.
So if you can just explain a bit on US side, how's the things are improving? We were facing a lot of problems.
US business is all based on projects, and the projects are coming back. The order book is moving. It was not moving before. Now it's moving. The orders are there, but it was not moving because of many reasons like COVID, government change, lots of certifications. There were a lot of things that were happening locally, but now everything is streamlined, and we are quite positive that things should continue.
So the 40-50 crores revenue what we are doing over there, so we have enough order booking for that, and even now.
The order book is not a problem. Order book is there. Order book is not a problem in the US. They always have an order book. Only thing is, a customer pickup, because see, we are supplying to lots of defense projects, lots of other things. So if the big projects are delayed, then definitely we are a part of a big project. So definitely that will hamper our supplies to the customer.
Okay. And these now the order book are now getting executed or customer
exactly. The order book is moving now.
Okay, so thank you very much. Great.
Thank you.
Thank you. The next question is from the line of Jinesh Sanghvi from Principal India Mutual Fund. Please go ahead.
Yeah, hi sir. Couple of things. One, you said that 1 lakh ton we have kind of done through debottlenecking, and that is already operational.
Right.
So if I have to look at, say, June quarter to September quarter, what has been, is that 1 lakh ton fully operational or is it partially operational? How has that been? And what was the capex that we have incurred for this 1 lakh ton? That was one. Second is, because the earlier guidance that you had given was 45 crores for a 2 lakh ton capacity.
No, see, the thing that we had said was that, that we have a lot of equipment available, from the other plants that we have moved.
Right.
So that is where the equipment was available to us, and we have added that equipment into a capacity.
Okay.
So that's how the cost was already there in the books. The cost is already there in the books.
Okay. So if I have to understand it correctly, say from 7 to 11 is what we will be, 8 to 8 plus another 5 is what we will be doing,
yes,
right? Additionally to reach 13, which includes these 4 lakh tons plus another 1 lakh ton of debottlenecking.
Yes, numbers. Cylinders,
yeah.
Number of
cylinders, right. And what will be the combined capex for this when we say, because 4 lakhs is for 35 crores, so additional 1 lakh ton will be what additional capex out there?
Another 100 crores.
Okay, 100 crores. Okay. And this does not include the greenfield one?
Includes greenfield.
So, sir, I'm getting a bit confused. So if you can just run me through the entire expansion plan, what is it, and how it will go about, along with the capex, if you can give me the timeline year-wise, when it will get commissioned, and the capex for each of these years, sir.
Okay. So now, first we announced the capex for 35 crores. That is going to take us 8 months. That is going to give us a capacity of 4 lakh cylinders.
Yeah. Right.
Now the debottling plant, the greenfield is 45 crores. That is going to give us 2 lakh cylinders.
Okay.
And timeline, the greenfield is going to take at least 18 months.
This is going to take 18 months. Okay. This 45 crore of greenfield will take 18 months.
Yes.
And that is 18 months from today.
Yes.
Okay. Fine. So this will take us to 14, right? 4 plus 2, 6.
Yeah.
And we are currently at around 8 lakh tons in India.
13. They'll take us to 13, right? 13. We are currently 7 in India now.
Yeah,
7
and 6.
Okay.
7 lakhs.
Okay. So but you said that from Q1 to Q2 you have also done some debottlenecking. So when you say debottlenecking, are you taking that as 8 lakh tons or you are taking that as 7 lakh tons only today?
No. The capacities are still at 700,000.
Okay.
By debottlenecking, we are able to achieve higher output. And finally, when we have the full machinery in place on the incremental project which you announced, that will finally conclude to adding 400,000. So 700,000 plus 400,000, that will be 11 plus greenfield of 2.
Okay. Fine. And for the Hungary expansion, what is the plan? What is the capex out there?
So I already, in my earlier statement, given that that total capex there would be in the region of 16 million, which is closer to 134 crores. And we are going to invest closer to 20 crores.
And balance would be?
Balance would be incentive from the government and borrowing.
Okay.
So we'll get around 4.8 million as incentives from the government.
Oh, 4.8 million.
Yeah, euro.
Okay. And the 16 million is also in euros, right?
Yeah, right. Yeah, that's also in euro.
Okay. And when we are fully operational, and this Hungary will be commissioned by which particular date? Any timelines out there? 18 months, 24 months?
Earlier, that is 24 months. Yeah, it's like mid-23.
Mid-23. Okay.
18 months from now.
18 months.
Okay. And once we add, say, this 6 lakh tons in India and the Hungary expansion, what is the optimum revenue that we can do out here in the India operations, including the 6 lakh tons, and what would be that number for the Hungary plant as well, in terms of optimum revenue in terms of based on the capacity utilization and everything?
I think
or
you can
incremental revenue.
Calculation, for this. So,
sorry, sir?
I'll give it to you in some time. You can in the meantime.
Okay. Fine. And sir, we have seen kind of our plant running at the optimum utilization right now. So with these capacities kind of coming up, do we see, say, a downtrading in terms of our margins which could happen, because probably we'll have to move a more shift in terms of our mix towards industrial and other things going forward? Or probably you are still confident about having that higher margin out there?
Yeah, I think the CNG business is growing very fast. So I think the margins will be, still be there.
So if I have to ask you, how has this percentage been, say, 2 years back, and how has the CNG percentage been today? Like what we talk about 60%, what was that number, say, 2 years before?
What is 60%?
The CNG breakup of cylinders? Yeah.
Okay. So do we have that number with us? Recent 2 years back, what is the margin and what is the margin today? The difference.
So what I'm trying to understand is, because when we say that...
Yeah, I got your point. We got your point. Yeah. You're trying to say, are they sustainable, or, what's happening?
Yeah, and the other thing is, I want to also understand the kind of reason for the improvement in the margin. So basically, we have seen that CNG is 60% today, and we are making 27 or 28% margin.
But not only on CNG. This is a combined, no? This is a combined margin.
On a combined basis. So because earlier our margins used to be around 15% odd, I guess, right?
Yeah, but the turnover was also quite less. If you compare the turnover, Once the fixed cost is covered, your the incremental is only because of your material.
Okay.
So high level of incremental revenue which you have.
That's largely to do with the increase in the material cost, right?
No, not material. He's saying increase in the capacity. So the capacity has been increased, and the base is remaining the same.
Right.
Fixed costs are more or less the same, but the revenues have gone up. So we've been able to achieve, because of the product,
higher EBITDA.
Yeah, product value addition and the product choice of product that we have planned to manufacture has given us a higher sales and higher EBITDA.
So sir, can you just throw some light on basically how has the product mix behaved in the last 2 to 3 years? I understand one is the volume part of it, but other than volume, because if I have to look at say FY20 volumes, we were at 680,000 tons cylinders, I guess. 19 was also something in terms of similar quantum. I'm not sure how the number of cylinders were in FY21. So if you can, because my sense is that in FY21 also it was kind of 710,000 or something odd in terms of number of cylinders. So naturally there is a mix change which has played a role out here, which has helped us in terms of margins more than the number of cylinders, right?
Right. It's all based on the product mix.
It's product mix, yes.
It's all based on product mix. If you sell bigger size cylinders, obviously you have higher margins there. If you sell CNG, there's higher margin. So I think it's a mix of the product mix which gives us incremental EBITDA.
Yeah. So if I just wanted to understand how has that mix changed in terms of value addition percentage or something, if you can share. What was it 2 years back and what was it today as on date?
Business now, which is on the higher side.
See, lots of value-added products have come into the mix, as per CNG is concerned, industrial concerned, so there's a complete mix of products, high value-added products that we have put in over this time. So that is where you see this, growth coming from.
Okay. Fine, maybe I'll take it offline, sir. Probably. And any increase in staff cost and other things that we could see along with the increase in the volumes that we are targeting?
Not really. Not too much.
Not really. So any other places so what could be the increase per se in terms of our cost matrix other than the raw material cost, which probably will grow in line with the volume growth? What are the other variable costs which could see increases?
Okay, yeah. For general,
it will increase. There will be some general increases. Yeah.
Okay. Fine, sir. Thanks
for all your questions. Yeah,
and if you can just share that revenue number maybe later on, that one could.
So you can get in touch with Sanjeev, our CFO.
Okay.
No, I think he can probably, you can have a one-on-one meeting with him, so you can, all these questions, can go into more into detail.
Sure, sir. Fine. That was pretty helpful. Thanks a lot, sir.
Thank you.
Thank you. The next question is from the line of VP Rajesh from Banyan Capital Advisors. Please go ahead.
Yeah, hi. Thanks for the opportunity. So one question was, what was the capacity utilization in the current quarter in different geographies?
So you could say in India it was 90%. I think in Dubai it was around 70%. In US, what is it? 40%.
Okay. And then the second question is, you said your margins in the standalone, that is Indian business, will be around 27 to 29. So once you look at the overall margin, what is the guidance for the consolidated entity?
What is the consolidated?
Maybe 22 to 24%.
Okay. All right. Thank you. That's all I had for now.
Thank you. The next question is from the line of Rajiv Jhawar, individual investor. Please go ahead. Rajiv Jhawar, can you hear us? Rajesh Jhavra, may I request you to go ahead with the question, please? Due to no response, we move on to the next participant. The next question is from the line of Hasmukh Jain, individual investor. Please go ahead.
Hello. Are you able to hear me?
Yes, we can hear you. Yes.
Yes. Congratulations for the great set of numbers. My question is regarding the raw material sourcing. As you have mentioned that you have 100% dependence on China for raw material. So due to the power outage, what's the situation? Are you facing any trouble in sourcing the raw material? And what's the price scenario?
Sorry. Raw material sourcing, definitely there are challenges. But, we have been planning so much before this power outage because we were facing a lot of logistic challenges from China anyway.
Okay.
The delays in the vessels. So lots of planning has gone in, on the ordering aspect. So we are not facing as such any outage and shortage on raw material front because, we've been planning and, doing much in advance because, anyway, all our material was imported. And so, we had to do much more planning. So we have done that. So we are well secured as far material is concerned.
Okay. And what about price scenario? Any increase in the costs?
Yes. Price of steel continue to increase.
Okay. And any future plan to just diversify this geographical concentration for the raw material sourcing? Do you have any?
No, not really, because these are much larger investments and, we are a very small, our consumption for steel is not so large. So, we will continue to, focus on what we are doing and, not go for any backward integration. I mean, at least this is the thought process, that is we have today.
Okay. So, there is not much problem on this side?
No. Sourcing is not much of a problem. No. We have all our raw material is well planned and, we are receiving it and, we are tracking that every day. So there is no such, issues. And the suppliers also are not, giving any signs of problems even in the outage.
And whatever the increase in the raw material cost, you are able to pass on to the...
Yes, we are able to pass it on to the customers.
Okay. Thank you.
Thank you. Thank you. The next question is from the line of Chetan from Alpha Invesco Research. Please go ahead.
Yeah. Thank you for the opportunity again, sir. So will it be fair to assume we'll be able to maintain our gross margins beyond 45% going forward?
45% gross margin. Yes.
Okay. And just wanted your view on this thing. When we talk to most of the analysts, the popular street view is that CNG is more like a stopgap arrangement. That it's just a matter of time when the electric will really take off. So there will be hyper growth for the next 3-4 years, after which we might see some growth challenges. So in this context, how do you view these things, or is this understanding not comprehensive? And is there a case that CNG will continue to grow even after next 5, 7, 8 years?
No, definitely CNG will grow. CNG is going to grow quite fast and grow well over I think the electric vehicle, first thing the cost of the vehicles, the infrastructure, is going to take some time, before we can see a full-fledged electric vehicle kind of scenario. And there are a lot of other technologies that are also, coming in now. So CNG, I think, will coexist. They will be in coexistence, when it comes to larger vehicles and other type of vehicles where, CNG can play an important role. So CNG, I think, will be there.
Okay. So can it happen that, let's say, in your view, and I just wanted to understand your view on this, that wherein the truck and bus segment can be the largest segment going forward, followed by passenger and followed by something like that. Is that the fair directional trend that I'm able to understand?
Yeah, I think that would be the business that will continue. But even the passenger cars, as long as CNG continues to be affordable and the vehicle cost remains in control, then I think there should always be a market. And infrastructure. See, again, what has been happening is the CNG infrastructure was not available 5-7 years back, so you could not see this kind of growth. Now infrastructure is available and it's growing. The kind of large investments that are coming in this sector, definitely will be an easy, convenient fuel for the customer in the future.
Yeah, correct. Because I was just going to Bajaj Auto's conference call. So they are saying for every 100 CNG pumps, the market for CNG three-wheelers goes up by 10,000 units. I mean, that's the kind of number that they have been working with. Yeah, that's it from my end, sir. Thank you. Thank you very much.
Thank you. The next question is from the line of Anil Kumar Sharma, individual investor. Please go ahead.
Good afternoon, sir, and congrats for the great numbers.
Thank you, sir. Thank you.
My question is, we are giving good numbers for the last many quarters, and our numbers are increasing. But any strategic investors, good investors are not coming. It is not in our hands or your hands. But my point is, can we go for something like investors' calls at different places so that we can show the numbers to them?
Sir, definitely we'll take your suggestion and we'll definitely.
All other companies, good companies are doing, and future is at least medium term to long term future is good. We can actually the required numbers, but investors are not coming. Hello.
Yeah. So see, we are definitely, as a company, we are trying to communicate with the investor community on a continuous basis, and we are consistently giving the results. So I think it's just a matter of time that we'll have a good investor base.
Yes, definitely. Numbers are good, and it is just a matter of time. But from our side, actually, you can do some try. We can try so that different calls.
For sure.
Okay. Thank you. And my request and from next year, can we expect the good dividend? This time also we could have given a dividend, much higher dividend. But next time, dividend policy should be there so that we can expect. This is required. This is what investors want actually.
Right. No, we'll definitely keep it in mind, and we'll give a suggestion to the board on the higher dividend.
Now we are debt free. Our cash accruals are good. Our expenses are not very high side. We have cash accruals. So it should be distributed. That gives the credit to the company. It is a waste.
Yes.
Yes, this is all from me. You have good numbers, and I wish you again. I hope that the next half year will be better than this. Thank you.
Thank you so much, sir. Thank you.
Thank you very much. The next question is from the line of Sonal Minas from Princeton Capital Management. Please go ahead.
Hi, sir. Am I audible?
Yeah.
I had a question on maybe if you could give some guidance around the pickup in demand you're seeing from the CV side. How is the order booking looking? And just looking for some subjective input on that.
Yeah, the order book is quite strong in the CV sector for CNG.
Okay. And is that something which is you see happening maybe for a year or two, or
Yeah, they definitely, because with these diesel prices and the Euro 6 norms, CNG has become a preferred fuel, which, the adaptation can be very quick, and the results, So, it's a nationwide, phenomenon now that, because the amount of CNG stations that are coming up on a daily, monthly basis, that the customers can, the people can see it at large, and more and more customers can come into the fold for CNG.
Okay, got it. And the capacity that you are adding up, as you were explaining to people before, is that something which will be bifurcated based on the product line, or just or you seeing, let's say, a disproportionate allocation in one product category, let's say a passenger vehicle or CV, which this capacity will be dedicated to? Just trying to understand that.
It's the size of the line which is there. Other than that, it will be.
See, we have our dedicated customers, and we are committing quantities to them.
Mm-hmm.
And we are expanding and production producing as per that. Okay. I don't know if does that answer your question? Is that something?
No, I was just trying to see maybe I think to be specific, I'm just asking if the disproportionate part of your capacity is getting added to commercial vehicles. Is that the direct question I was trying to ask?
Disproportionate capacity.
Or a larger share of financial capacity.
Larger. Not, it's a mixed bag. It's a mixed bag of, a lot of things, 3-wheelers, 4-wheelers, CVs. It's totally it's a mixed. We may not be able to give you exact numbers of, what is going where.
Understand that. Okay. That's it from my side. Thank you.
Thank you.
Thank you. Participants, you may press star and 1 to ask the question. The next question is from the line of Kaushal Sengupta, individual investor. Please go ahead.
Yeah, good evening. Thanks for this opportunity.
Good evening.
Your other financial assets have gone up from 73 crores to 142 crores. Could you please let us know, what explains this increase?
Raw material. It's paid for raw material.
No, other financial assets. Is advance for supplies?
Yeah, it's advance to supplies.
Okay. So your business requires a substantial advance to suppliers, right?
Right.
Oh, okay. Great. Thank you. Thanks so much. That's all.
Thank you.
Thank you very much. And now hand the conference over to the management for closing comments.
Thank you once again for your interest and support. We will continue to stay engaged. Please be in touch with our investor relation team, CDR India, for any further details or discussion. Looking forward to interacting with you soon. Thank you so much.
Last question.
Thank you very much. On behalf of Everest Kanto Cylinder Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.